Hey guys, what's up and welcome to a new Tesla update video. So today, as usual, let's go over Tesla, let's go over the market and figure out what has happened and what we can expect moving forward. So as usual, if you enjoyed, don't forget to hit that like button. It does help a lot. This is not financial advice. I'm not a financial advisor. And of course, my membership section on YouTube is live. The link is down below. We're over 220 members strong now, which is great to see. It's $3 a month where essentially I share my today thoughts on Tesla updates, things that's happening essentially as it's moving and like whatnot. Pretty much throughout the trading day. If you're interested, link is below. Jumping right into it, Tesla closing in just a few minutes here. Looks like we'll be closing somewhere around this 2% mark, which is going to be putting us at just not too far above $216 per share, which compared to the market, pretty much following the market today. More or less exactly it, right? So pretty much exactly in line, which is not necessarily a good thing or a bad thing. It's just, it is what it is, right? But there's a few things to go over here. So on top of everything we've discussed yesterday, if you haven't checked that video out, I do recommend. There's a lot of good information there. At least I think so. The thing I'd be adding here that's really important to look forward to, I guess not really look forward to, but look to see how it plays out, I guess, over the next, maybe even tomorrow, really, is going to be this little situation we find ourselves in right here on the 65-minute chart. By the way, quickly, I want to mention, people sometimes wonder why I use the 65-minute chart and not the more commonly used 1 hour. That's because the market isn't open for an even amount of, or an exact amount of hours per day, right? Because don't forget, it opens at it closes at 4, right? Eastern, of course, but it opens at 9:30 a.m. So you have that weird 30-minute gap. So one of the candles isn't actually a full hour candle. So it kind of off balances it a bit, while 65-minute makes each single candle equally weighted because it's the same amount of time and it adds up to it being the perfect amount. Hopefully that makes sense. But regardless, going to the 65-minute chart on TransPider, link below if you're interested in using it. We have a little bit of a bear flag, right? So this bear flag right here, you know, it's a channel, it's a bear flag, however we want to look at it. Now, there's two ways you can look at this, right? One way is, I mean, it's a bear flag regardless. It's a matter of how big of a bear flag, right? Some people, you know, normally they'll take it from here, right? This is technically the pole and this is technically the bear flag. Then you make your way up and then you measure it and it will be a pretty sizable fall, right? So for instance, like if this were to happen to play out, which I don't think it is, I'll go over what I think it is, right? As an example, this will take us somewhere around the mid 100s, right? Again, I don't think that's the way it's going to play out. I personally view this as, if it is an actual literal bear flag, right? Something like this, give or take, right? Give or take something like this. Small bear flag, right? Again, the reason that it's a small bear flag, or at least as of right now, it seems like a small bear flag, is because we're zigzagging very like tightly, I guess, if that makes sense, right? If it was going to be a big bear flag from like all the way up here, then we would have had a much larger first bounce before this kind of little retrace happened, right? Let me zoom in, right? This bounce right here would have been much more substantial before this little retrace happened, and then another bounce and retrace, right? It would have been much more sizable both ways, really, in order to make a larger bear flag that can, you know, be an overall just a massive bear flag, similar to what we have on the weekly, I guess you can say, if you will. Gotta sneeze 1 second. Excuse me. Kind of, you know, like this, right? We have like this is a large arguable bear flag, which we talked about, right? Again, you know, we talked about this many times as to whether or not this is an actual bear flag, but this is technically an example of one where, you know, it's much larger. The bounces are much like more aggressive, farther ahead, right? Even the drop downs are much more aggressive, right? It's a much larger bear flag. So this is just a much smaller one. Just take that for what it's worth, of course, but just something I thought I'd mention. But nonetheless, right, this is something I'm watching very closely, and I've been telling my members about this, right? So even though the RSI is still looking great, the MACD is still looking pretty fine, nothing wrong with that whatsoever, and it's looking, if anything, actually bullish, honestly. There is still potential for a bit of a drawdown here, right? So if we were to snap this bear flag, which will be somewhere around this kind of 215, like high 215s, low 216s, or something like along the lines of that, which of course it changes, you know, as we continue making our way up this little bear flag channel, whatever, right? The level to break constantly gets higher and higher and higher, right? So keep that in mind. But the point I'm trying to make here is if we do break it somewhere, again, 216 to make it simple, let's just say, that means that we'll drop down. And I think at the very least, we'll drop down, if not to gap fill right here, which was yesterday's close essentially, which was just about $212 per share roughly, right? At the very least, we'll come down there. If not, we'll go a little bit lower to somewhere around the 210s. That is kind of what I'm personally first and foremost like foreseeing happening, right? That's going to be my first like two main real targets, which are very close to each other. Again, it's a small bear flag. I don't expect a drawdown once we eventually break down, which we usually do, to be anything too completely crazy or sizable, but I do expect that to happen nonetheless. Now, if in theory, let's say it gets a little bit worse than that, let's say we go below this gap fill. Let's say we go below this 210 area over here, which I ideally would like to hold. And let's say we come back down to the, 205, 6, 7, something like that, that general range, like where this candle was. That's still not a bad thing necessarily, right? That's still technically fine, right? Because think about it, right? This whole area is still, in theory, a massive area of demand, right? It's been a lot of resistance and supports, and this is just another area where in theory should be a lot of demand here, and so far it's proven to be the case, and we're having a little bit of issues pushing back above it, you can see on the weekly. Now with that being said, if we come back down here, it's not all bad news. We still have the 200-day moving average below us, which is good to see, right? That'll be a support, and again, it's just an area of demand, which is good to see as well. So the only thing that would change in my perspective is the bounce up to it. Let's say, for instance, again, my ultimate target is to have a dead cat bounce to retest this breakdown on this massive channel we finally broke down out of on the weekly, right? A retest of that would take us to somewhere around the 240s, right? So keep that in mind. That's kind of my overall main price target, with the first level potentially being somewhere in the 230s, which in this case will be that, I believe this is the 21 EMA, right? Yeah, that's the 21 EMA 100-day moving averages right on top of it. So, right, that'll be the first level. And if we break that, then we actually retest the actual flag, right? Or the channel. So that'd be like my main level to pay attention to. But again, if we come down to the low 200s again, I still think it'll happen. I think it'll just take a bit longer than I thought it would initially. Because again, usually when Tesla, and especially Tesla, has aggressive falls, the dead cat bounces, the relief rallies are usually almost as aggressive as well, right? So I still expect the aggressive version to happen personally, which again, as long as we hold that 212, maybe even 210 level, like I said, from that little mini bear flag that we can potentially obviously still break down, which we're very close to it. That is still in play, like a fairly more aggressive bounce, right? We talked about this yesterday as well, where we had that a chart that I showed you guys. I guess I can scroll down and show it really quickly one more time. Where the how the market, or I guess S&P really moves, this one right here, right? How it moves essentially based on the situation that we find ourselves in, which is the second year, a new Democratic president, right? You can see here, October to November, as we're leading into November, very close to it, towards the end of October, massive fall, sizable fall, which is essentially what's happening to Tesla right now. And then of course, towards the end, you start basing, which is kind of what we're doing right now, right? Like I said, and then we of course make our way back up and get a nice, pretty sizable rally, which is kind of the rally. This right here is what I expect essentially to be that retest of the 940s-ish area, which of course is also going to be that, massive channel retest as well. That's kind of the main thing I'm looking at. Now, going back to the daily here really quickly, you can keep in mind the fact that, again, we're just barely closing above the 200-day moving average on the daily as well, which is good. It's a little bit of an iffy candle, right? This candle is, it's a doji candle, but it's in a weird little situation here where it's a little bit unsure as to what it wants to do, but we are closing above the 200-day moving average, which is good. We also have the 21 EMA up here, right? You can see it's pointing straight down, which means it's going to be coming over to us pretty darn quickly, which unfortunately will act as a resistance, of course, right? Once we actually get back into it. So take that for what it's worth as well, right? That is going to happen relatively soon, especially with how hard it's pointing down. That means we're probably going to be watching out for that pretty soon. On top of that, we also have this situation we find ourselves potentially in as well. Excuse me, hopefully it's not too blurry, but the resolution on YouTube sometimes is sucky. But nonetheless, this is a pattern that I shared with my members earlier today, like halfway through the day, saying how this is something to potentially watch out for, where we could, in theory, be potentially looking at a cup and handle pattern, a bullish cup and handle pattern, which will be looking like this, where essentially, if ultimately, overall, right, doesn't have to happen tomorrow, but relatively soon, we ended up getting that rally and we come up to about 230, which is where this, let's go back to 65-minute, which is where this top candle right here, right, kind of, got rejected at, and we came back up, got rejected and smacked back down, and then continued the downtrend post earnings, right? So if we come up somewhere to around that, very high 220s to potentially even 230s, that would potentially be an area of rejection. That would be a major level to break as well. But assuming we do get rejected from there, all that does, at least in my eyes, is potentially start setting up a nice looking bullish cup and handle pattern, which again, the white line is the cup, and these blue lines right here would essentially be the handle, or could even be arguably, of course, a bull flag if you just draw a pull from down here all the way up to here, and then right. But again, doesn't mean this has to happen. This is just something to watch out for, right? We're just kind of starting to get a little bit of predicting action going over here, so that we're ready if it does happen. So by the time it starts happening and everyone else is talking about it, we were already thinking about it, right? We were already expecting and ready for it. So that's another thing that I would look at and be really kind of considering and waiting for. But all in all, that's kind of the main things I'm looking at. Taking a quick look at options flow, right? Nothing too crazy as well. If I kind of increase the premium here, we still have that major one all the way down here, like I talked about the other day, 2.7 million in premium. Mentioned this one yesterday, right? Pretty large, pretty whale, big whale there, right? 3 million, that's a lot, right? But all in all, over here, nothing too crazy short term, right? Short term, we have, I guess the biggest one here is almost the 1 million in premium in calls, 230 calls. We just talked about 230, right? So could be something like that, right? It is for January of 2024. So it's not like a very, very, very short term, but it's like a kind of medium-ish term call. So it doesn't mean it has to happen right away. This person bought a lot of time, or at least enough time, so it can still take easily a few weeks. And as long as it happens within a few weeks, this person most likely will still bank, even if we go down in the very, very short term still, like I just talked about, and then make our way back up in about, again, a few weeks. Also a possibility. But nonetheless, nothing too crazy in the options flow, unfortunately, right? We have the order block flow over here, if you will, right? Where we have buy orders, you can see being set right pretty much at the area that we bounced off of today, which is great to see. And in terms of sells, there's really not much more other than all the way up here at 266. Not really giving us much information. I might even move that indicator. I'm not really sure how much I like it right now. It's kind of useless, honestly. But those are the main things I'm looking at right now, right? So again, the main thing is really just paying attention to this arguable bear flag. If we break down, okay, cool, let's make sure we don't break really below 210. As long as we hold that, we can still go higher. If we go below that, that's still fine. Still, in my opinion, a good area to buy the dip, right? Not financial advice, just my opinion, but it'll just take a bit longer in order for us to really get back up there. But the one thing that can happen is if we do come back down here to about, like, let's say 203, 204, or something of the sorts, can just be a large double bottom potentially, right? So keep that in mind too. That is a possibility where we go something like this, come up here, come back down, and then we make our way back up, right? That's also a possibility. And this, of course, will bring us up to roughly that 242 gap fill up here, which is also, of course, the retest of that massive channel that we broke out of. So those are the main things I'm looking at. The weekly, unfortunately, the MACD still looks a little bit bad, man. Like, I'm not gonna lie, even with this little nice rally, at least so far, right? Still looks pretty bad. Like, the weekly still doesn't look very bullish. And again, we still technically have fallen out of this channel. I want to make it very clear. It's still technically bearish overall, because even if we come back up to retest this and most likely fail to get back in, or in other words, successfully retest that and break back down again, I still think there's a chance we come down to somewhere around the 180s, which is going to be this blue line over here, give or take, right? Or on the daily, you can see, right, this blue line right here. Very much a real possibility, somewhere around the 180s. So it's overall still bearish, and it's still, be careful kind of situation, but there is still some fun to be had on this potential dead cat bounce to retest. So just keep that in mind. That's kind of the way I'm looking at it right now. So take it for what it's worth. But all in all, thank you so much for watching. If you enjoyed, don't forget to hit that like button. And as usual, I'll see you tomorrow. We also have a lot of earnings coming out, so that can change how Tesla moves. I'll see you tomorrow. Peace.